As August draws to a close, investors are closely watching the unfolding drama of Nvidia's earnings alongside Federal Reserve Chair Jerome Powell's latest policy signals. Powell's remarks on Friday marked a pivotal moment, suggesting that the time is right for a policy shift. Following Powell's statement, major stock indices ended the week on a high note. The S&P 500, GSPC, Nasdaq Composite, IXIC, and Dow Jones Industrial Average, DJI, all saw gains exceeding 1% for the week. The S&P 500 is now hovering just 1% below its all-time closing high. Powell's comments signaled an impending interest rate cut in September, although he stopped short of detailing the extent of the reduction. He emphasized that the pace and scope of cuts will hinge on future economic data. This led markets to anticipate up to 4 rate cuts of 0.25% each by the end of 2024, as Powell noted the Fed has ample room to maneuver. With only 3 Fed meetings remaining in 2024, there is speculation about whether the Fed might opt for a more substantial 0.5% cut in a single meeting, depending on the data. Goldman Sachs' economics team, led by Jan Hatzius, suggested that a weaker-than-expected August jobs report could prompt a 50 basis point cut on September 18th. This would align with their prediction for a more aggressive easing approach. As of Friday afternoon, market expectations for a 50 basis point rate cut by the end of September had risen to 38.5%, up from about 24% the previous day, according to the CME's FedWatch tool. Jonas Galterman, Deputy Chief Markets Economist at Capital Economics, cautioned that a deeper cut might signal more significant economic concerns. If the Fed feels compelled to implement a larger cut, it could be due to a slowdown greater than what current market conditions suggest, Galterman wrote. He indicated that a 25 basis point cut might be more favorable for equity markets. While Powell's speech focused on potential risks to the labor market, investors are also awaiting an important inflation update due Friday, which could further influence market sentiment and Fed policy expectations.